Mortgage banks are doing it again, but that doesn't mean it's a good idea to apply for that kind of loan. Obviously, if you want to be easily able to afford the monthly payments. Now, before I jump to this video, just a quick disclaimer. This video is not a financial advice. I'm just simply sharing my opinion, and any financial decision of applying for the loan is solely your responsibility. Okay, so normally when you apply for the mortgage, there is this 20% down payment rule, meaning that if you want to buy $500,000 house, for example, you would have to come out with $100,000, and that's with your own money, of course, meaning you would have to have $100,000 cash pretty much, or at least have that money on the account. But now with that being said, as you probably already know, the house prices didn't really drop yet, or at least they didn't drop that much, but yet the interest rates are pretty high. Average mortgage interest rate is about 7% right now, and if somebody has lower credit score, that's even higher. So obviously way less people can afford to buy the house right now, and especially put this 20% down payment, because obviously the prices are increasing too all over the place. So now because of this situation, I guess, instead of the banks requiring the 20% down payment, they're starting to offer again 100% financing of the entire mortgage. So for example, they're gonna offer somebody two separate loans. The first loan is gonna be for the 80% of the mortgage, and then the second loan is gonna be for another 20%, or 95% for the first loan and 5% for the second loan. Well, you get the picture. So basically, without any money saved, if your credit is okay, you can potentially qualify for this kind of loan. Now, I know on the paper this sounds pretty nice, right? So you don't have any money saved, you just go to the bank, apply for the loan, and then you become the new homeowner, right? Nice and easy, right? Well, let's think about it for a second. Maybe first ask yourself, can I actually afford the monthly payments? So just because we got the loan, that doesn't mean we can afford the payments. And also, especially if you don't have any savings, what if something breaks in the house? What if I have some emergency repair that is gonna cost thousands of dollars? This is definitely something you should think about. Case in point, when me and my wife bought our house some time ago, obviously, we didn't really have any savings, and it was kind of hard to adjust to the mortgage payments, because we went from paying $750 rent monthly, that was for one bedroom apartment, to $2,500 mortgage monthly. Obviously that was huge difference. And about 2.5 months later, we still didn't have any savings, and our pipe broke down. And I'm talking about the water pipe that connects to the street. So that repair right there cost us $4,200, and because we didn't have any money that time, we had to actually put it on the credit cards. Sure, we obviously paid it off later, but what I'm saying is, it already had some impact on our finances, and we were definitely struggling in the beginning. Look, what I'm actually trying to say is, just because the banks offer you the loan, that doesn't mean that loan is necessarily gonna be good for you. The thing with the banks is the history pretty much repeats itself, because the way they offer the loans today, this situation actually happened some time ago. And in 2006, 2007 and 2008 especially, the banks were also financing full mortgages, even to the point of 105% financing. Yes, that means besides financing the full mortgage, they would give the new homeowner 5% extra, and that's for furniture shopping, renovations and etc. So the incentives to buy the house were really crazy that time. But look what happened next. A lot of these people couldn't afford the monthly payments, and about 3 to 6 months from that time they purchased the house, they started to be in default, and a lot of these individuals lost the house to the foreclosure. Now I know these days it's really hard to save the money, it's really painful, it is definitely not easy, it's harder to save the money than ever before. However, think about this, how painful this is actually gonna be if you lose the house to the foreclosure, or you have to sell the house because you can't afford monthly payments. I'm gonna tell you right now, this is gonna be drastically more painful. So that's why maybe save some money first, make sure you have stable situation financially, and then when the right time comes, and only then, you can decide to buy a house. Maybe save some money for the down payment. It doesn't necessarily have to be 20%, but even if you have 10, 12 or 15%, that's gonna be much better, because your monthly payments will be lower too, so you can afford it easier. Now, speaking about savings, high savings accounts are one of the best places to keep your money, so you may check this video next. This is my experience with Capital One high yield savings account, and as always, thank you for watching.